What if I told you that donating to charity could actually reduce your tax bill, and in some cases, even bring your refund back to life? Sounds too good to be true, right? Well, it's not, but there's a catch. Most people have no idea how charitable deductions actually work. That's why in this video, we're pulling back the curtain. You'll learn exactly how to claim a deduction, what types of donations qualify, and how much you can deduct. And at the end, I'll reveal one powerful move that smart donors use to double their tax savings legally. Let's get started. Number 1. What is a charitable deduction, really? A charitable deduction is a tax break you get when you donate to a qualifying nonprofit. Think of it like this. You give money to help others, and the government rewards you by letting you subtract that amount from your taxable income. So if you earn $50,000 and donate $5,000, you might only be taxed on $45,000 instead. But here's the thing most people miss. Not every donation counts. Number 2. Only certain charities qualify. You can't just give your cousin $100 and call it charity. To claim a deduction, your donation must go to an IRS-recognized 501c3 organization. These include churches and religious groups, schools and universities, public charities like the Red Cross or Habitat for Humanity, some nonprofit hospitals, and animal shelters. A quick way to check is by using the IRS's tax-exempt organization search tool. If your charity is listed, you're good. For example, donating to your local food bank will likely qualify, but helping your neighbor fix their roof, while generous, won't. Number 3. Not all donations are deductible. Now here's where it gets tricky. Just because you gave doesn't mean you can deduct. Let's say you paid $200 for a ticket to a charity dinner. If the dinner's fair market value was $60, only the remaining $140 is deductible. Another example, if you donate old clothes to Goodwill, only the fair market value, not what you originally paid, is deductible. And services, your time is priceless, but sadly, the IRS puts no deduction on donated labor. So if you're volunteering at a shelter every weekend, hats off to you, but don't expect a tax write-off. Number 4. You have to itemize to deduct. This is the part that trips up a lot of people. You can only deduct charitable donations if you itemize your deductions on your tax return. Most Americans take the standard deduction because it's simpler and often larger. As of now, the standard deduction is around $13,000 for single filers and $27,000 for married couples. If your total itemized deductions, including charity, mortgage interest, medical expenses, etc., don't go over that, you won't benefit from listing them separately. So, if you're just donating $300 and taking the standard deduction, that $300 won't affect your taxes at all, unless. Number 5. The exception that everyone missed in 2020. In 2020 and 2021, Congress allowed a special deduction, up to $300 per person, for cash donations even if you took the standard deduction. It was a rare break that helped millions. Unfortunately, that rule expired. So today, to write off donations, you must itemize. Still, it's worth checking each year. Tax rules change, and staying informed could mean saving hundreds or even thousands. Number 6. What counts as a donation? It's more than just writing a check. Here are things that can count: cash and checks, credit card donations, clothing and household items in good condition, stocks, bonds, or other investments, even vehicles. Let's say you donate a used car to a veterans charity. If the charity sells it for $2,500, that's your deductible amount. Or if you donate shares of stock you've owned for over a year, and they've gone up in value, not only do you get the deduction, but you also avoid paying capital gains tax. That's a win-win. Number 7. How much can you deduct? Here's where it gets juicy. In most cases, you can deduct up to 60% of your adjusted gross income, AGI, for cash donations to public charities. So if your AGI is $100,000, you can potentially deduct up to $60,000. But there are limits. For non-cash donations, the limit might be 30% or even 20%, depending on what you donated and to whom. If you exceed the limit, don't panic. You can carry the unused deduction forward for up to 5 years. So if you gave big this year, but couldn't deduct it all, you can spread it out over future returns. Number 8. Documentation is everything. You can't just say, "Trust me, I gave." The IRS wants proof. If you donate more than $250 to any one organization, you need a written acknowledgement. That letter should include the amount, date, and whether you received anything in return. For smaller donations, a bank statement or canceled check usually works. And for non-cash donations over $500, you'll need to file IRS Form 8283. If the item is over $5,000, like a painting or antique, you may even need a professional appraisal. So always keep good records. It could save your deduction and save you a headache during an audit. Number 9. What about donating stocks or crypto? This is a little-known strategy that wealthy people use all the time. Let's say you bought stock in a company for $1,000, and now it's worth $5,000. If you sell it, you'll owe taxes on the $4,000 gain. But if you donate that stock to a charity, you can deduct the full $5,000 and pay zero tax on the gain. Same goes for crypto, which the IRS treats as property. This method helps you give more, save more, and feel like a genius in the process. Number 10. Giving through a donor-advised fund. Ever heard of a donor-advised fund? It's like a charitable investment account. You contribute money or assets, take an immediate tax deduction, and then recommend grants to your favorite charities over time. Let's say you had a high-income year and want a big deduction now, but aren't ready to decide where to give. You can put money in a donor-advised fund, get the tax break this year, and choose charities later. It's flexible, tax-efficient, and increasingly popular with both wealthy and middle-income donors. Number 11. Bunching donations for bigger deductions. Here's one last strategy, and it might just be the smartest. It's called bunching. Instead of donating small amounts every year, you combine several years' worth of donations into one tax year to exceed the standard deduction. For example, let's say you usually donate $5,000 annually. Instead, donate $10,000 this year and skip next year. That way, your total deductions might finally be enough to itemize and claim the charitable deduction. It's like saving you're giving up and cashing it in all at once, legally. Number 12. Employer donation matching programs. Many companies offer donation matching programs, and most employees don't even know they exist. Here's how it works. You donate to a qualifying charity, and your employer matches that amount, doubling your impact. So if you donate $500, your company might add another $500, and now your chosen charity receives $1,000 total. The original $500 you gave still qualifies for a deduction on your taxes, and even though your employer's matched amount isn't deductible for you, the charity wins big. To find out, check your HR portal or ask your benefits manager if your company has a matching gift program. It's free money waiting to be used. Number 13. Qualified Charitable Distributions, QCDs. If you're over age 70 and a half and have a traditional IRA, here's a secret move. You can donate up to $100,000 per year directly from your IRA to a qualified charity. This is called a Qualified Charitable Distribution, or QCD. The best part, it does not count as taxable income, even though it satisfies your required minimum distribution, RMD. For example, if your RMD is $15,000 and you donate $15,000 to a charity through a QCD, you won't pay income tax on it. That's a powerful strategy for retirees looking to lower their tax burden while doing good. Number 14. Gifts that don't count as deductions. It's important to understand the limits. Certain gifts, while thoughtful, don't qualify for deductions. Giving money directly to individuals, even if they're in need, is not deductible. Helping a friend pay rent or sending money to a struggling family overseas won't count. Donations to political campaigns or lobbying groups also don't qualify. So before you assume your generosity comes with a tax break, make sure the gift meets IRS rules. When in doubt, verify with a tax professional or check the IRS site. Number 15. Donating appreciated assets instead of cash. Cash is great, but sometimes donating appreciated assets is even smarter. If you've held an asset for over a year and it has increased in value, giving that asset to charity may offer two benefits. You avoid capital gains tax, and you can deduct the full fair market value. Let's say you bought art for $1,000 and now it's worth $10,000. Donating that art means no tax on the $9,000 gain and a deduction for the full $10,000. if the charity can use the item in its mission. If not, the deduction may be limited to your original cost basis. Still, it's a strategy that can stretch your generosity and your tax savings. Number 16. Donating through your estate plan. Planning ahead can make a huge difference. By including charitable donations in your will or living trust, you can support causes you love even after you're gone. And it's not just about goodwill. Charitable bequests can reduce the taxable size of your estate, which might lower estate taxes. You can also name a charity as a beneficiary of your retirement account. Because charities don't pay income tax, the full value goes to your cause, instead of being taxed if left to heirs. This is one of the most tax-efficient ways to leave a legacy. Number 17. Keeping an annual giving log. Tax season can be chaotic. That's why it's smart to keep a running log of your charitable contributions throughout the year. Use a spreadsheet or a simple notebook. Log the date, amount, organization, and whether you received anything in return. Attach or save receipts and letters. That way, when April rolls around, you're not scrambling to gather documentation or remember what you gave. This small habit makes a big difference and protects your deductions. Number 18. Deducting out-of-pocket costs for volunteering. Even though your time isn't deductible, your expenses might be. Let's say you volunteer at a youth camp and drive 30 miles round trip. You can deduct mileage at the IRS charitable rate, currently around 14 cents per mile. Buy snacks for a fundraiser? That's deductible. Purchase supplies for a nonprofit event? That may count too. Just keep receipts and write down the reason for the expense. It's not a huge deduction, but every bit helps, and it's a great way to track the cost of your generosity. Number 19. Watch out for scams. Scammers love to take advantage of generosity, especially after natural disasters or big tragedies. They'll create fake charities with names that sound legit, hoping to trick donors into giving money that never reaches those in need. Before donating, double-check the organization's legitimacy. Use sites like Charity Navigator or GuideStar. And remember, legitimate charities won't pressure you for money or ask for donations through gift cards or wire transfers. Protect your heart and your wallet. Number 20. Using tax software to help track deductions. If you're not working with a CPA, tax software can help. Most major platforms like TurboTax or H&R Block allow you to input charitable donations. They'll ask you questions, calculate your eligibility to itemize, and tell you if your donations actually impact your tax refund. Some even let you import data from donation tracking apps. It makes the process smoother and helps you avoid missing a deduction. And when you're organized, you're more likely to get every dollar you're entitled to. Charitable deductions can feel confusing, but they don't have to be. When you understand how they work, what qualifies, what doesn't, and how to maximize your impact, giving becomes more rewarding in every way. And now that you know the rules, you're not just giving from the heart, you're giving smart. So, what's one question you still have about charitable deductions? Let me know in the comments.